Hello, welcome to my video. Okay, so today what I wanted to do was talk about Ema'S, Ema'S, if you will, Ema'S everywhere. I want to talk about the most overpowered Ema'S. You know, as far as the strategy that I use and what I think is most overpowered. And I wore a fun shirt just for that. So let's get into it. Okay. Very simply put, there is, well, today we're going to be talking about 1, 2, 3, 4 Ema'S. Okay. All these for very different parts of my trading and how I use them. So we'll start with the 9 EMA, okay, the famous 9 EMA. See, lots of people talk about the cross over the 20 or the 21 or something or whatever that is, and, you know, it's very tight to the price action EMA, as you can see. We kind of rode this up yesterday, which was Friday, today being Saturday. And so I use the EMA for a couple things, okay? But for the most part, we're going to just break down each EMA first, and then we'll cover them in more detail. So the 9 EMA is for riding a trend, okay? Grab a ticket, get on the ride. And the 20 is for dip bounces and entries, okay? It's like a trampoline. You get down there, you know, and you just want to jump off that thing. Okay, and the third being the 50 EMA, which is the brick wall. Okay, and what do I mean by that? Basically, it's really hard to break through. You know, odds of getting through the 50 are a lot tougher than the 20. And then there's the 200, which is basically the entire trend. Okay, so just to break that down even faster for you, the 9 EMA is for riding a position. The 20 EMA is for bounces and entries. The 50 EMA is the brick wall, and the 200 EMA is the overall trend. Okay, and as you can see on my chart, I have the 9 EMA as green. The 20 EMA is going to be the pink here. The 50 EMA is going to be blue. All right, and the 200 EMA is the red. All right. Is everybody following along so far? Okay, good, excellent. All right, now let's break it down. Let's start with the 9 EMA. There's a couple of interesting strategies that I like to use for the 9. Typically, you guys know I trade off the 3-minute chart, as you can see. That's what I have set up here on the QQQs. They're QQQ or the Qs. Someone told me I shouldn't say the QQQs. I don't know. That's whatever. 9 EMA, okay, it's for riding a trend, first off. So what do we do? How do we use it? Once I'm entered into a position, I will simply use it to run a visual trailing stop. And that's about it. And so what am I looking for? I'm looking for a candle close underneath the 9 EMA. Especially if it's distant from the 20 EMA, which happens sometimes. It's fairly rare, but sometimes like over here, that's kind of distant. Sometimes it gets a little far apart. Like right here, okay, they're pretty close. I might actually risk off the 20. But for the most part, the 9 EMA is a great EMA to just ride out a position on. So if you're wondering, you know, how come I cut my winners faster than I cut my losers? Well, maybe you're not using a system to ride out those winners. And so this is something that you can use. You can use the 9 EMA. The next purpose of the 9 EMA is in very rare circumstances, similar to Friday morning, you can actually use it for an entry. And so what I'll do sometimes is if I'm on the 3 and I see a big old green candle forming like this, I'll flip over the 1-minute chart. Okay, and this is the only time I go to the 1-minute chart. And then I scroll to the left. I look at the open. And then I haven't looked at this yet, so I'm just going off the seat of my pants here. But, okay, we can see right here-ish. Okay, so what happens is, while these massive green, like, high volume bars are forming, The 90 EMA on the 1 minute chart, it just kind of goes off, okay? It's going to rip up with the price action. And you can actually buy the first pullback to the 90 EMA, which in this case would have been right here. So in those specific scenarios, which doesn't happen every morning, you know, by the way, this is for day traders who trade in the mornings, if I didn't make that clear. So this doesn't happen every morning, but when it does, it's actually it's a really, really nice play, because now if I've entered right here, what I do at this point is, so I flip to the 1 minute, I buy off the 9, and then I actually switch back to the 3 minute chart. Okay, and then we'll go back to, this is a different day, or is it? Maybe it's not. No, right here. So now I'm in the position right here, okay? We blast up over kind of everything. And then at this point, if we're up over the 50 and all these EMAs are down here, I'm going to risk off the 50 until the 9 and the 20 catch up. So what happens, the 9 kind of caught up here. This is sort of flagging, just hitting high day after high day, which is beautiful. You're probably scaling out. If you're not scaling out on those premium pushes, you know, you should be. But anyway, if you want to hold that out longer, you can, because the 9 isn't caught up yet. You just, anytime, so for a stop out, I'm waiting for a candle close. For an entry, I'm not waiting for a candle close. I don't really care. But for a stop out, I'm waiting for a candle close below the 9, let's say. So the 9 catches up, and then this actually bounces off. It does go under, but guess what? It doesn't candle close. It bounced up. Here, let me remove this for a sec. It bounces up off the 9, and it keeps going. We don't have a candle close till right here. Okay, and even right here, that's a break-in base off the previous high of day. So odds are that's actually going to keep going, and it does, and it hits sort of this high here. If you're not full out by here, you're nuts. But that is holding a position. So we took the QQQ from 311.25 all the way to potentially 314.15. You'd be well in the money if you're day trading, you know, 0 DTEs on a Friday. Because you probably would have bought the 312s. You know what I mean? So that's an excellent, excellent opportunity to buy off the 9 just by switching to the 1. All right, that's the most complicated EMA. The rest are much more simple. So if you've been following along so far, nice, dude. Good work. That's impressive. So the 20 EMA, okay, this is the pink line on my chart. All right, that EMA is what I use for dip entries. Now, if I could find a decent one, like this is actually a really good one right here. So the 90 EMA is for entries and bounces, right? It's great to risk off of because it's kind of like a last defense for the price action before it typically makes a bigger move to the downside or the upside if you're in calls or puts or whatever. But this entry right here is a really, really nice example. So what happens is we have this previous high day. I have it written in yellow here. It's a break right here and base right here. That's an A+ setup that I use. It's a break and base, and it's also a pullback to the 20. Now, it did come down below the 20, but I'd still be willing to take a position there, risking this previous high a day, and then I can risk off the 20 until it closes underneath the 20, or I get a nice premium push, which, of course, I would have been selling a high day right here. This is a new high day. So, yeah, it comes back over the 20. It's kind of like your bounce, right? Here it comes down, bounces back up. Once again, right here, here's a bounce. Let's go to the day previous, see if we get any more nice bounces here. Here's a nice bounce off the 20, bounce up, bounce up. Yeah, I mean, you know, that's the whole point of the 20 EMA. It's one of my favorite EMAs to base risk off of. So I'll take off the 9 EMA, for example, and then risk off the 20. Or I'll take off the 50 EMA, and then price action moves above the 20, and then I'll risk off the 20 to have that sort of tighter risk. Now let's talk about the 50. Okay, the 50 is even more simple. It's literally just something that I'll take an entry off of. That's about it. It's a brick wall. Price action shouldn't really move through it. It does though, and when it does, it has kind of a larger move down, so you can anticipate that. If it does break down, it's a great area to have your final stop loss if you took below the 20 for some reason. It's a great area to put your stop loss because you do have, like, look, it gets broken here and it just slides to the downside. So you could also do this sort of a break in base for short position off the 50. As you can see right here, price breaks below it and then comes back up, tests it, and rejects hard. So that's another really awesome play you can take. But yeah, typically it's respected. Look, here's the previous day. So look, once you break it, slides down. Once you break it again, rips up. You know what I'm saying? And then over here, it's a break in base off this previous high day, and you're on the 50. Perfect entry. And then what do? You take off the 50. let's say this is your entry now. You took right off the 50, and then it comes back up over the 20. You can risk the 20 EMA. And then guess what? You want to even tighten your risk more? It comes back over the 9. You can risk off the 9 EMA, and that's your new stop. And then you would stop it up here. Look at that trade. That's a really nice trade. That's probably 30 or 40% right there on a 0 DTE. Really, really nice trade. But that's essentially the 50. And now for the most easy EMA to kind of look at and sort of analyze is the 200. Okay, this thing is cracked. It's a beast. Essentially with the 200, it's really simple. Okay, on the 3-minute chart, the other charts I don't use as much, but on the 3-minute chart, the chart that I use, if price action is above the 200 EMA, price action is bullish. If price action is below the 200 EMA, it's bearish. That's it. That's it. So look at today, and we'll go back. I'll show you some. Excuse me. Oh my God, I had like 6 Eggo waffles before this, and they don't want to be in my body anymore. So we're above the price action on Friday. Look what happened. We bounced off the 200 twice. Not bounced off. Like, you're not going to get a perfect bounce all the time, okay? So if you're expecting that, welcome to the stock market. But you have 2 decent bounces off the 200, and we're bullish all day long. We just keep ripping up. This pullback here, an excellent pullback to the 200. My script picked up a support here, so you could have, grabbed off that support, or even if you grabbed off the 200, and kind of just, really waited for, even if you risk like pre-market low, like right here is pre-market low, this 311.19, you didn't have a candle close below it. Okay, remember for those stop outs, you're waiting for that candle close. You didn't candle close below it, so you could have taken off the 200, risking pre-market low, and guess what? This ripped all the way into the afternoon. It didn't stop, okay? And that's just one day. Let's go back to the previous day, all right? We're above the 200 EMA. Sometimes you get some nonsense below it, but you don't have to trade that. You don't have to trade all the time, right? You can take some. You can take a break. Actually, I think I did take a put position off the 200 on the bottom, so that we'd have some downside, which wasn't the case. I think I did end up selling in this sort of flaggy mess down here, and then this thing ripped up. So when it breaks above the 200 and the 20, then you can take a long position and kind of rip this up, risking low of day. Pre-market low. There's so many ways to trade, man. It's so awesome. But we're above the 200 on Thursday. Guess what? Price action ripped up all day. Let's go to the day before that. We're above the 200. Price action ripped up all day. Let's go to the day before that one. Okay, we're below the 200. Guess what? Price action went down. Bearish price action. Day before. Oh, we're below. Guess what? Price action went down. Anytime we got close to it, you can just short that and bring it down. The day before that, we have kind of a weird day. We sort of did we popped up, came down, did this sort of bear flag. If we can draw this out as a bear flag right here, just like this. Okay, you got these higher highs and these higher lows as well, which kind of represents a bear flag. We break down below. You can take a break and base off the 9 there below the 200 and then short this all day because now we're below the 200. Okay. Over here, we're above the 200 for most of the day, other than some nonsense right here, which probably would have stopped you out, chopped you up a little bit, but that's fine. And then we ripped up all day long. The day before that, we're above the 200. We ripped up all day long. So this is just a neat little trick, guys. Once again, above the 200 ripped up. It's just a repeating. I can sit here and repeat myself every day of the week, but these are just EMAs that I personally think are overpowered, and that's why I use them. I love my setup. I love how I trade. If you guys want more videos like this, hit me up. This is, these videos are fun to make. It's easy because I can make it on Streamlabs, just as you're seeing right there. I hope you guys enjoyed this. If you did, hit the like, leave a comment, and subscribe, okay? We'll do some more videos. What do you guys want next? The VWAP conversation? You guys want supply and demand? You want VPOC? Whatever you guys want, let me know. I love and appreciate every single one of you guys. And make sure you check me out on Twitch as well. That's where I do most of my content creation. It is 100_1,000,000. I'll show you guys on the ending screen right there. All my socials are the same. Everything is 100_1,000,000. UHMILLION. Okay, thank you guys for watching. I appreciate you, and we'll catch you in the next video. 100 out.